Danny is feeling fine, but I'm feeling a little coronavirus this morning.
Oh,
I'm a
yeah.
little worried. Started having a cough last night and woke up with like no energy. But then I forced myself to go on a 1.5 mile run, and that worked out. So I don't know. I'm feeling a little better than I was an hour ago. I'll tell you that. But we'll see. Everyone was kind of coughing in the car. Like there's been a lot going on. Danny's
Yeah,
good.
the virus is not good in the South.
It's been popping off in the South. I'm worried that I'm like in the beginning stages of it, to be honest. But anyway, let's jump into it here. It's June 15th, and the market looks like it's going to be a bloodbath today. I mean, that's really all I have to say about it. I personally wasn't doing anything Friday. I bought a little at the Lowe's, Bristol, Mars, and Amazon, but I was doing things with Danny and her family, so I wasn't really following along. But I didn't like the way it was going so up and then down and then up and then down. It just seems like an unhealthy market right now, and I think you need like almost a little bit more of a washout to get the real buyers in. There's too many people that are playing these games, and they need to get whooped before the market turns back up, in my opinion. Dad, what are your thoughts?
Yeah, I don't disagree with that. Friday, I did do some trading. I bought and sold Boeing a couple of times. Unfortunately, I ended the day long Boeing, thinking I'd get an extra few points this morning. And Boeing's down 10, 11 points. One interesting note, though, the stock is not as low as it got on Thursday, even though the market's lower now. So I think there's less panic going on now than was going on Thursday. I'm not sure that's a good thing. But when I look at some of these levels that are going on in a lot of these stocks, it doesn't feel like a panic. Maybe it'll turn into that, but it's not feeling that way right now. The market was down equivalent to about 1,000, and now it's down 645. It's definitely virus scares going on, and then we had the shooting again, so people are just not feeling good about what's happening in the country. The polls are really negative for Trump, which doesn't help the market, and that's probably entering into it a little bit. It's always
a lot of those are fake. So those polls,
doesn't matter
I'm so
if they're
sick
fake
of this
or not.
media backlash with Trump. I'm tired of it. I'm going to stop playing into it too. The reality is with this whole thing, it's blown out of proportion because it's an election year. It's that simple. People want him out of office. It's not happening. Once he's reelected, all the dust will settle. We're heading into a major bull market here. This is all bullshit. No one's shutting down again. The economy can't handle it. So these virus scares are all just a narrative to scare off some, people out of the market. And I think we'll have
the virus definitely has a real effect, whether or not the economy shuts down. Like a small example is if I end up having the coronavirus, I'm not booking a flight to Colorado, which I was planning on doing this week. I'm canceling that whole trip. Things like that. And if you see
that's a one-off thing.
It's not that much of a one-off when you have the whole entire South region and now the whole entire West region starting to spike up. And Beijing just went back into shutdown mode.
I don't think young people care personally unless they're actually sick. I saw it in New York this weekend. Cuomo threatening to shut down places, which he can't legally do. People don't care. They're over it. We're in America, and they already did the shutdown. It's never happening again. We live in a democracy. If you're sick, I get it. You're not going on a flight. People that aren't sick in our age group are going on flights.
Yeah, for sure. So, Bob, are you looking to buy stock today, or are you kind of wanting to see things more settled?
I've kind of looked at some levels, and there's certain stocks I'm thinking about if they get down to the levels, but I'm not going to just jump in on the opening and play some. I'm looking at a few bit, I like quality names. We talked about this last week when the market is rough, and that's your chance to get into names you may not own that are the gorillas, like I said last week. And a couple of those names are like McDonald's, Cisco, Intel. I'd even say Dunkin' Donuts if it gets down to a good level, Mike.
It's fallen a ton for no reason.
Yeah, but if you look at the chart, there's certain levels on the chart where it's getting towards that look more interesting. because some of these stocks have been on a run. So you're now getting into areas that, you could take a look.
Yeah, what's your thoughts on Tesla?
There was one time where I shorted it, and luckily I covered it like within 3 days because I was nervous as hell being short it. And, I just can never get my arms around the fundamentals of, when you look at Tesla compared to auto companies. And I know Elon Musk is phenomenal and everything else, but it's always seemed extremely overvalued to me, but it continues to be. And as long as he can perform and come out with new things, it'll stay up. He's got a cult following, and he's got
unless that guy dies, that
behind him.
stock's going up. Like literally, he has too many what ifs in his arsenal that he can pull out of his hat. That's the thing with Tesla. They have a lot of things they can just roll out off of his innovation, the way he thinks.
But a lot of it is timing with the stock. I mean, that's
anytime they get a downgrade, 10%. It's time to buy it. They got 2 downgrades. I would buy in the next couple of weeks. Those people have no idea what they're talking about. When you look at the people that downgraded them, they're not actually, they don't understand Tesla. I don't own it personally, but I think there's a good buying opportunity if it dips a bit from here.
Yeah, the comments that stood out to me were Ron Barron. He was so bullish on them, and that guy just is such a respected, savvy investor that it made me, I don't own Tesla, but they were above 1,000 for a little bit last week, and now they're almost below 900. I think if Tesla got below 800, I would maybe buy some just long term.
The shocking thing to me about Tesla is the fact that he really doesn't have any competition yet. Everyone was talking about for years, wait till the competition catches up.
And KLA is their supposed competitor now.
Mm-hmm. I think they're far away. They don't even have a plant. They have money. That's about it, right?
Yeah, for sure.
Seems like that's all you need these days.
So, yeah, I mean, it sounds like this is definitely not really a day you want to try and day trade these weak names as much as add to really strong positions, which is kind of the same thing that we were saying on Thursday. Yeah. And, it'll be interesting to see how low this goes.
Yeah, and I think one thing to talk about, we mentioned Danny was short Hertz last week, and they were able to get a judge to approve them doing an offering, a share offering, even though they were in bankruptcy, which has never been done before. And that throws a whole wrench into the whole bankruptcy game.
Hold on. Could you kind of explain what that means?
I wish I could explain it, but the bottom line with it is that when a company is in bankruptcy, most of the time the stock becomes worthless. And there's usually a lot of bonds outstanding in these bankrupt companies, and they have first dibs to get any money that's left over. And they usually will get 30 cents on the dollar or 50 cents on the dollar. So if you look at the bonds of Hertz, where the bonds are trading, give you an idea of what was expected out of the bonds. And at the end of the day, Carl Icahn, who had a huge position in Hertz, sold all his shares at 70 cents because he thought that was a good sale to make based on Hertz being in bankruptcy and probably going to zero. And then the speculators came in, bought this thing up to 6. Hertz realized this is an opportunity to sell shares, get cash, and maybe avoid the worst case scenario where they're just having to rely on the courts to tell them what to do. And I don't know where they're going to issue the stock, if they ever even get it done. But it changes the whole game of bankruptcy if you're able to sell shares after you're declared bankrupt or in bankruptcy. So
yeah, crazy.
You have to watch that. It's very interesting.
Yeah, it's almost like they're playing into the manipulation games that are happening that we keep hearing about with like the Robinhood apps and things like that, which seems like a ugly situation waiting to happen. I have an interesting put option because I know people have been intrigued by these lately that I'm going to pull up right now on my screen. I'm not saying I'm going to do this, but I just like to throw out examples because a lot of people have been asking me and texting me about it. So again, put option gives you a contract where you're getting paid a premium basically up front, and you're committing to buying a stock if it's below the date or below the price that you agree on the date that you agree on. So Amazon, for example, and again, I started off when I was doing puts along with Mike, doing it on a really conservative end, where right now Amazon's trading at 25, 24. I'd maybe back in the day look at a put at, let's say, 1800, and this isn't really going to provide much value, but a put at 1800 basically is committing me to buying $180,000 worth of Amazon only if it closes below 1800 on the date that I put, which is November 20th. So if it closes above, which as you can see right now, it's way above, even after coming down some, you don't buy anything and you just collect the premium, which is 3,000. Again, a 3,000 premium to be committed to buying $180,000 worth of stock is awful, and I don't recommend it at all. But this is where it looks more interesting. If you go up to 3,200, doesn't show on here, but you see it's 69,000 for the premium. So here you'd be buying the stock at essentially 3,200 minus 690. It would end up being 225.10. 25.10, about where it is right now. So you'd be getting paid almost $70,000 to buy the stock where it is right now on November 20th. And obviously the downside is if the stock ends up falling way below where it is right now, you're stuck buying the stock essentially where it is right now. So if on November 20th the stock's at 1,500, you're going to right off the bat be down a lot of money. And obviously you need the money to be able to do the option. For them to even allow you to do the option, your account needs to have basically the $320,000. But there's other options for companies that aren't as expensive per share. And that's, just an example of a put option that to me looks really, really appealing, because the way I look at it is I'm not necessarily saying Amazon's going to be at 3,200 by November 20th, but I think it's going to be higher than where it is now, which is where you'd be buying it at. So let's say it's at 2,900. Yeah, you're then buying it, but you're buying it and you're already at $400 per share right off the bat. So you're already in the green. And then if you want, you can sell it, or you could just hold it for a term.
Or you could just close it out before the expiration date.
Yeah. And that's just an example. And obviously, like I said, with Amazon, it's tough because the share is so expensive. I
think they've run up too much personally. I'm expecting Amazon to drop to like $23.50.
I don't think they've run up enough. I think everyone is starting to turn to Amazon. I've been hearing like Danny's talking and her work colleagues talking. I don't really know if it is, because I think when you add in Amazon Web Services, which I still don't think people even understand, but they essentially own the internet, and anyone, like, again, our company specifically, we pay the most amount of money to any of our vendors to Amazon. It has nothing to do with their product, service, e-commerce website. So that company is making money hand over fist. It's crazy. While you guys talk, I'll pull up another one. I'm going to just look at them.
One thing to mention, what Danny is talking about, has its risk in it, but you could actually cut down that risk by buying a way out of the money put, which basically protects your downside. And obviously every stock's, the volatility determines what you pay for that put. So you could actually protect your downside if the stock did happen to go to something horrible happen to the company. You'd be protected on the downside if you own this, put that Danny's describing right now. But you give up, a portion of your gains by owning the put, but it does protect you.
Yep, and that's where I heard someone on TV saying, this is the greatest quote of all time: you're not going to go broke taking a profit, but you're not going to get rich. But again, these put options are extremely risky. It's just, this is the time to do it, because it feels really cringy to do it, and maybe you'll even get a lower opportunity. But if you're long-term bullish on a market, the time to do it was not last week when the market was, on this insane bull run. It's when the market gives up close to 10% of its gains and then maybe gets back in rally mode. If the market gets back in rally mode and you have a put option, you're going to be up huge on that put option way before the expiration date. You'll have a chance to close out of it if you want. So I'm going to look up another one while you guys are talking.
You could take that to the next step. So when I mention the names that I mentioned, like McDonald's, Cisco, or let's say an Intel, you could sell a put in those names, which are, really, really solid companies. And it gives you a way to get into them without buying the stock at these levels. And if you were thinking of buying the stock at these levels, that kind of allows you to buy the same stock lower.
Yeah, but then what are your thoughts on that, considering it's a dividend stock when you're not owning it?
Well, that's the part you give up by not owning it outright, right? By not owning the stock.
That's why I personally prefer doing option trading mostly on non-dividend stocks.
Definitely. Yeah. And it all again comes down to the margin, like what Mike and I used to do. And we got carried away with it during the 2016 to 2019 bull run. And at times we probably were being stupid, but it ended up working out. We would sell these put options well into the money and when I say well into the money, I mean like right now I have Chewy pulled up. That means that it's trading at 48. Mike and I might look at options a year out where it's trading at 65. And this is when we were first in the market. So all we saw was that everything just kept going up, up, up. And we're like, oh, this is incredible. If you have some money, you can't lose in this market. And then we were humbled quite a few times, obviously. But yeah, this is another one. And a rule of thumb I always kind of look at with put options, and this is just how I try and come up with an appropriate value. If the premium doesn't pay at least 10% of the position you're committed to buying, I don't really look at it as good value. Like if you're going to get like a 4 or 5% premium on a position you're committing to buy, you're better off owning the stock or finding something different. And that's where the premiums are way higher when you do it in volatile markets, and they're way higher in names that things like that. So like this is another example. If you look at Chewy at 55, which I'm pretty sure, it was already at that price shortly. I mean, I really love this put option, but I might just consider buying Chewy. But when you look at this put option, again, you're basically committing yourself to, 11,000 put options. So yeah, I mean, you're committing to buying it at, Mike, what's the math? 44 per share about, right?
Where is the strike price here?
The strike price October 16th or 1060. Yeah. So you'd be buying the stock basically at $45 if this didn't hit. So right now
44.40.
Yeah. So right now it's at 48. So essentially the stock could still come down 10% and you're still in the lock. And obviously it's all before October 15th. So nothing really matters until that date, except for the fact that you could trade in and out of it. Like if Chewy gets up to 55 in 2 weeks, you're going to be up huge on this. And then, you cash out, you move on to the next one. But this is an interesting one right here because it pays a really, really healthy premium. And I put 10. An important thing to realize when you're doing the put option game is you need at least 100 shares. The minimum contract you could do is 1, and that means you're doing 100 shares. So when I do 10,
so 10 is 1,000 shares.
Yeah, so you're basically being committed to buying $45,000 worth of Chewy, and that's how that game works.
I think that my rule of thumb with options is trying to find a volatile stock like a Zillow that's a great long-term play, and then on a bad day in the market like today, looking at a long-term option out of 6 to 12 months and then getting aggressive on it and then closing it out on a really good day in the market. I've had a lot of success with that, with time value optimizing.
And the thing to also keep in mind about options in general is that the pros have computer programs that spit out names to them every day that the premiums are out of line with the volatility. So they have a list of names that are the right ones to play just based on being out of whack with reality. In other words, if the volatility is a certain amount, they know that the option should trade at a certain level. But if the volatility is the same and that premium is much higher than the volatility suggests, then that's when they would play. So there are people out there with major advantages on this stuff over, us playing around. So you should keep that in mind. And there's lots of ways to play options. The most conservative way is to own the stock and sell calls against it. And that's a whole different conversation. But it's not as your chances of making as much money or much less with that, obviously.
Yeah, I did that on Twilio way back in the day. And obviously you're locking in profits. If the stock goes down, you're collecting the premium. But it's almost the opposite of what I've been saying. If the stock goes above the price that you're doing, you're forced to sell the stock. So if you do that, you're limiting yourself to the upside of stocks. And a lot of the time when you're buying stock, hopefully you're in it for the long term, so you don't want to necessarily do that. But yeah, that is definitely the strategy. Everything I've been saying is very, very risky stuff. It's not like stuff I recommend doing, or I personally don't do it with like my core investments. It's stuff that you can mess around with and perhaps do some damage in the market, but it's risky. So you gotta know what the hell is going on. So that's kind of that. What are you, Dad? Are there any technical levels that you're looking for in the market right now? I see Hertz is on CNBC down 24%. Not surprising. It's I don't even want to talk about those names though, because I don't want to get caught up in that game. I think as long as those traders on Robinhood don't start crowding into good names like Microsoft, you almost have two separate markets going on. And I think it would be healthy for the overall market to see this other market really, really pop hard. And, the companies that are supposed to go bankrupt, they need to go bankrupt. They need to stop having these up 80%, down 80% days. It's just ridiculous.
Yeah, I mean, as far as the two-tier market going on, and that's okay. But, the very speculative names are probably down 10% or more today. And the names like Apple are probably down 2% or less. I don't know. I haven't looked at those yet. But, the market's going to break on the Dow 3,000 today. So, what's the next level? Say 2,900, 29,000. All right. It's
2,900
S&P. It's always round numbers to me when the markets are really in a hard mode like this. When the market's moving less, then you could pick actual levels off of charts, but it's anybody's guess when it's like this.
So if there was somebody that has never been in the stock market and they're looking to buy their first company today, like first share, what would be your top 3 companies?
I think I would go with big names: McDonald's, Cisco, Intel, Facebook probably, but Facebook hasn't come down enough, I don't feel.
Yeah, it has. It's trading where it was in February.
But yeah, I mean, if you've never been in the stock market, pick names like those and go in small.
All they're doing is going up if the world keeps moving, is the reality. Like Facebook owns everyone's data on the planet. So when you think about it, they have nowhere to go but up.
But the thing you also have to remember, there are great companies out there that may not be great stocks going forward. It all depends on levels and value.
Like, give an example, like a General Electric, for example, GE.
Yeah, like GE, I don't even know if you call it a great company anymore. It used to be a great company. Now it's, struggling to survive, huge debt, huge pension liabilities. They got all these contracts in defense and building airplanes and medical devices, but who knows, with GE. It's not what it was. But
yeah, it does seem like the names that are just prevalent in everyday life and the ones that you are constantly using, like Apple, for example. If you're watching this, you're probably watching this on a Mac. You probably have an iPhone. Like Google.
I just got a new laptop.
you're probably spending all day on Google searching random things. You probably watch a lot of Netflix. Like, it's sometimes the good names are right in front of you. I think that's what you taught me at a young, right when I got into the market. You were basically like, just think about the companies you use. And you're like, what do you think do you ever use Netflix? And I was like, Netflix is a public company. And at that time I had no idea, but I still think that's a great way to do it. Like Mike, that's why you've always loved Chewy. You constantly see Chewy boxes everywhere. So obviously, people are really using Chewy a lot, and they had great earnings. They've sold off a lot. I'm going to buy some Chewy on this dip. There's no doubt about it. I'm getting in on them long term.
Yeah, I think it's a great way to get started in the market if you haven't been in the market, is to find names that you're really familiar with and you think are good.
That you use.
Yeah. And they're usually very good companies. Whether or not they're good stocks, they may be ahead of themselves at a given time, but over time they'll do well. I mean,
go ahead. What were you going to say about
Apple? Apple's had a tremendous move in the market, but it's still it's probably in almost every major portfolio, which is the good and the bad, because when you have bad days, they use Apple to take profits, and but those are the days that are opportunities to buy it when it's down.
Yeah, and it's also like a lot of people, there's a narrative around Apple and other names where you might look at it like their potential's maxed out. But the way you got to look at these really top companies in the world is they're constantly evolving. And what Apple might be in 20 years from now, if you look at where they've come, they're in the middle of their journey. It's not like their journey ends at computers and phones. They might get into healthcare. I know, Mike, you're really big on that. And
they're going to be the big winner in healthcare with wearables, 100%.
Yeah, and we're kind of just getting started with all that when you think about it.
Apple will be trading at $500 a share when you blink your eye before we even know it. No doubt.
I agree. I think those companies are long-term just going to continue to go up. Short-term, who knows? Let's do our picks of the day.
On bad days in the market for new investors, it's a great opportunity to get into a staple like an Apple, a Microsoft, a Google, a Facebook, and Amazon, or a Netflix. Like, those companies are not going anywhere. Even when you hear of competition with Netflix, let's be real. You could have 80 different Netflixes. People are going to still be watching Netflix. Doesn't matter.
And it's not crazy to think that it'll cost 3 times what it costs to be a subscriber of Netflix.
And people will pay it, just like they used to pay HBO $50 a month.
Definitely. That's the bull case for Netflix. They'll gradually keep increasing their pricing, and they'll continue to do that.
And you'll see people creating their own shows with where virtual reality is heading. It's going to be, the content game is going to change that in a way no one's even thinking about. That's why I'm so bullish on Facebook with what they've done with video.
Dow looks like it's going to open down 640 points. It's going to be interesting to see what happens today. It's like I don't want to see one of these days where all of a sudden it goes positive and then back down to 600 and then positive. Like, I think we need to see some normalcy, whether it's good or bad. It's something that represents the market's done with the last few days, which might take a while. I don't really know what's going to happen short term. My pick of the day, and picks of the day, I should say, because I'm feeling a little coronavirus right now, I'm going back to the stay-at-home stock names. I think Peloton, Chewy, I saw Shopify formed a partnership with Walmart this morning. They're off pre-market. But Peloton and Chewy, I think, have come down a lot off their highs. And I think it's just because people are exhausted of those names. I think those are going to be the first names to bounce back. That's my opinion.
Mike?
I'm going with McDonald's today. I think it's come down to levels that I looked at them during the pandemic as a great stock to buy, and I've been waiting for them to come back to life a little, and today seems like a great time to jump in.
Well, I looked at some levels, and believe it or not, McDonald's was one of them. 183 and a quarter is where I would try to pick up some McDonald's. And I got
out of that at 188 a while ago, so I'm definitely going to be jumping back in there.
Cisco's another one at 43 and a half. Intel 57.35. And a wild card, I'll give you FedEx, which earnings are coming out the end of the month. but I like FedEx if it's down at 123.60.
Your buddy Munz will love hearing that.
I know it.
All right, guys. Have a good one.
Bye.
Enjoy the day.